Gold or Bitcoin, the ultimate institutional investment battle. Let's dive into the nitty-gritty and break down what you need to know. First up, historical performance and volatility. Gold's been a trusty store of value for centuries, averaging a 1.5 to 2.5% annual growth rate. It's a slow and steady player. Bitcoin? Explosive growth of around 90 to 100% over the past decade, but with high volatility. Think roller coaster thrilling, but brace for the drops. Next, portfolio diversification. Gold's your stabilizer, especially during market stress. Negative to low correlation with equities. Bitcoin, on the other hand, is a high-growth asset with a dynamic correlation. It's like having a wild card in your portfolio. Liquidity and market infrastructure. Gold's market is about $13 trillion, with daily trading volumes up to $200 billion, well-regulated and mature. Bitcoin's smaller at $1.3 trillion with $50 billion in daily trades, but it's catching up fast with evolving custody solutions and improving regulatory clarity. Macroeconomic hedging. Gold shines against inflation and currency debasement. Bitcoin's promising in inflationary economies with its cross-border, seizure-resistant nature. It's like having a digital shield in your financial arsenal. Capital allocation strategies? Institutions typically allocate 3 to 10% to gold for wealth preservation. Easy to integrate. Bitcoin sees 0.5-5% allocations as a strategic growth hedge, increasingly part of the digital asset sleeve. Custody, insurance, and governance. Gold relies on vaults and ETFs, while Bitcoin uses cold storage and offers full on-chain auditability. Programmable transparency for the win. ESG considerations. Gold's heavy on the environment. Bitcoin's energy-intensive but improving with green initiatives. It's a narrative shift in progress. Strategic outlook. Gold's stable and reliable. Bitcoin's volatile short-term but holds exponential long-term potential. So what's the verdict? For capital preservation, gold takes the crown. For long-term growth, Bitcoin's your champion. Liquidity and regulation, gold. Diversification potential, both. Institutions are advised to use gold as a foundation hedge and Bitcoin as a strategic growth hedge. Monitor regulatory developments and you're on a path to a diversified, risk-adjusted portfolio. And remember, many funds like BlackRock and Fidelity are already on board. This is the new institutional norm. Thanks for tuning in.